But first, the markets just opened, with the Dow going back up after stocks took a beating yesterday. But investors are still on edge after Morgan Stanley sounded the alarm, predicting a sharp drop in the S&P in the near future, while Deutsche Bank, which predicted a mild recession a few weeks ago, revised its forecast to predict a major one on the way. Joining us now, columnist and editor for the New York Times Steelbook and co-anchor of CNBC's Squawk Box, Andrew Ross Sorkin. Andrew, I'll start with Deutsche Bank. What do you think made them change their prediction, their prognostication?
Well, I think there's two things happening at the same time. One is there's pressure on earnings of companies, and that pressure on earnings is coming because of the second piece of this, which is the Federal Reserve and the expectation that the Federal Reserve is going to continue to raise interest rates. We're going to see that next week when they meet the 3rd and the 4th of May. We just had earnings come out last night from Microsoft. They were strong, but then you start to look through an Alphabet, for example, which also came out with its earnings last night. And Alphabet, of course, parent company of Google, they were weaker on the advertising front, given some of what's actually happening in Europe when it comes to YouTube and companies advertising, or in this case, not advertising. But it really goes to the idea of a global economic recession. We'll, by the way, be hearing later today from Facebook's parent, Meta. And of course, later this week, we're going to hear from Apple and Amazon. So we're going to get some numbers. But a lot of these FANG stocks, these are the Facebooks and the Amazons and the Apples of the world and Netflixes. You look at from a 52-week basis, many are down anywhere between 15 and, in Netflix's case, 71%. And so I think that there's a question, is this the end, or is this the end of the beginning, or the beginning of the end, in which where we have Deutsche and some of these other banks now saying actually it could potentially get worse. And there's no real catalyst, it doesn't seem, that would actually power things higher at this moment.
Yeah. So,
but again,
Facebook,
by the way, short term. This could be a short term. This could be short term. This is not going to go on for. May not happen for years, or be a financial crisis like 2008. Just as a contextually.
Yeah, so it could just be short term, or it could be the end of the world as we know it. All right, well, that certainly gives us a range of possibilities, Andrew. Facebook, of course, lost, what did they lose, 25% of their value a month or two ago. I'm just curious, it seems more and more institutions are lining up with the belief that we're going to get hit with a recession, our first and obviously our first non-pandemic recession since 2008. How bad do they think it's going to be?
Well, it depends who you're listening to. I mean, some people believe that you were talking about some of these stocks down 20, 25, 30%. There's a question mark about whether the entire market unto itself falls off another 10 or 20%. I don't think people are calling for more than that. And again, the question is that going to be long term, or is that going to be short term? And also, and this may sound perverse, the more the market goes down, the more it may act as a de-inflationary metric, where the Fed says, well, you know, we were going to raise interest rates even more. Maybe we don't have to as much. So there is this sort of push-pull situation going on back and forth.
Yeah, and we can explain that. Obviously, the money that people have made off of the markets, the billions and billions of dollars that they've had.
It's the wealth effect.
The wealth effect, and so many of them are spending that money and finding it difficult to spend all the money they're making in the market. And you have the supply chain issue. It is all, I mean, backing this economy up. So you're right. If the market goes down a bit, you may see a loosening up of the housing market, a loosening up of other markets as well, right?
That's the goal. I mean, it's funny to say that's the goal, but in many ways, and we've talked about this on the program many times, what the Federal Reserve wants is to actually dampen demand. That's what they want. They want people to buy less stuff. because of the supply chain problems that we're having. It's sort of a unique situation. We have the supply chain problem being the actual merchandise itself, semiconductors and like, but also the supply chain problem in terms of labor. So in a way, you actually want less people going to the workforce. Again, I know it sounds perverse, but that's the goal because wages are shooting up as well. By the way, that's a good thing in many ways, but when it comes to economic growth, oddly enough, a bad thing. So these are sort of the push-pulls of what's happening right now.
Andrew Ross Sorkin, thank you very much. Great to see you. And up next, we'll take a look at the front pages from across the country, including an alarming look at the number of college students experiencing homelessness in the past year. And as we go to break, one headline from overseas, some good news for tennis star Novak Djokovic. The All England club announcing that players who are not vaccinated will be able to play at Wimbledon, which kicks off at the end of June. You may remember that back in January, Djokovic was barred from playing at the Australian Open because he was unvaccinated. The 20-time Grand Slam champion saying at the time that he'd rather miss major tournaments than get the vaccine. Jonathan Lemire, your thoughts on this move?
Well, it's another sign of the world trying to open up and put the pandemic behind us. Djokovic, of course, unable to play Australia because of that. But you know who can't play in Wimbledon? Dmitry Medvedev, because he's Russian and he's been banned from the country there. Medvedev, of course, beat Djokovic in the U.S. Open last year. Katty Kay, you're our resident Wimbledon correspondent for all the obvious reasons. What do you make of this? And also, just give us an update the status of the pandemic in London right now.
Yeah, I'm hoping that I'm not your Wimbledon correspondent for my tennis, because that would be really pathetic. Look, I think there was a feeling that Djokovic got so much attention. In a way, that whole charade destroyed that tournament, right? I mean, that was the story of that tournament, which was such a shame for the other players. So at least that won't be happening at Wimbledon.
And this was all worth it to hear you say charade. Katty Kay, thank you. We'll be right back.